We have bills to pay too, just to keep our Airbnbs open.
Airbnb superhosts say bookings have declined due to
2 years ago, I bought a house in Palm Springs and renovated it, and last January, I put it on Airbnb. I'm not gonna sugarcoat it, you guys. We lost money. It's not looking good.
Wow, how did we get here? Hey, my name is Adrian with Cashflow Marketplace. Let me share with you the events that led us to this point. Let's get right into it. I'll break down the story in 4 main parts. Let's start with part 1, which I like to call the introduction. Let's go back to March 15th, 2020. This is a day that people will remember for a very long time, because this is when the whole world shut down and everyone was in lockdown. Understand that when people stayed at home, they had unspent vacation money. I could also imagine when people are forced to stay at home for long periods of time, they would want to go out or go on a vacation. That whole situation created the demand. In order to prevent a recession, the Fed lowered the interest rates and made money cheap to borrow. Guess what kind of loans people started getting? Yep, home loans. This led to the housing boom. Because there were so many buyers, that led to the increase in home prices. If you were a homeowner, this was the best time to sell. As the restrictions were lifted, people started traveling again. Remember earlier when I said about demand? Well, the floodgates just opened. Hotels were fully booked. Airline was struggling to match luggage to a passenger. It was crazy. This leads us to part 2, the rising action. Back in part 1, I mentioned a lot of people were selling their homes. Well, some of the buyers were converting residential homes to short-term rentals. I wouldn't blame them. It was very lucrative because there's so much demand for travel. All of a sudden, owning short-term rentals seemed cool. A lot of gurus came out with programs how to make a lot of money using short-term rentals. And then we head to part 3, the problem. Airbnb occupancy started to go down. Why? The COVID lockdown feeling was starting to wear off. People were getting their fill for travel and life started to go back to normal. Not to mention, the Feds raised the interest rates, Russia invaded Ukraine, and China went on lockdown again. Historically, during high inflationary periods and the fear of a recession, discretionary spending tends to go down. This is Marriott's stock back in 2008. I use Marriott because Airbnb was conceptualized during this time. As you can see, they were doing pretty well leading up to the global financial crisis. But then, their stock plummeted and only started to recover in July of 2009. Lastly, the reason why Airbnb occupancy went down is because the market was just saturated with a lot of Airbnb units that came up online. According to AirDNA, in September of 2022, there were 70,000 new short-term rentals added in the US, which, although down from 75,000 in August, allowed available listings to reach an all-time high of 1.38 million. To put that in perspective, that is 1.4 million residential homes that were used as short-term rentals that could have been someone else's or a family's primary residence. Keep that number in mind because that will be an important note later in this video. The article went on and said, occupancy levels have fallen where the number of nights available has surpassed the growth in number of nights reserved. This is where the hits the fan. Say Jill wants to buy a property that is worth $200,000. She qualifies for an investment loan, so she has to put down $25,000 with a 4% interest. Add in property taxes and insurance, her overall cost is $982. The rents in the area is $1,275. In this scenario, Jill has a positive cash flow of $293 per month. Jack is also a buyer and is wanting to buy this property with the intent of converting it to a short-term rental. Using a vacation home loan, he is only required to put 10% down. With a 4% interest, taxes and insurance, Jack's monthly expense is $1,208. After doing some research, Jack finds that he can charge $74 a night or $2,736 per month. Even with a higher monthly expense, Jack is netting $1,528 per month. That is 5 times what Jill is getting. That means Jack can pay a little bit more to win the deal. If Jill's offer is $200,000, Jack can basically offer $250,000 and he'll still be making $1,226 per month. Okay, here's the current situation. Jack overpaid and is over-leveraged. If the value of his property dropped 10%, then he is underwater. 2. Because he overpaid and is over-levered, he has a higher monthly cost than Jill. His business plan is dependent on working as long as he can charge the short-term rental rates. That means Jack will have a negative cash flow if he decides to convert his short-term to a long-term rental.
See, on each month, we didn't even break even. We were really at a loss of about $3,000 for each of these months.
I feel for you, Shelby. How long can owners like Jack pay out of their pocket? What if Jack owns 2 or 3 of these? That leads us to part 4, the outcome. Right now, prices haven't gone down despite the increase in interest rates. That's because there isn't enough supply to meet the little demand. But here's the recipe for the perfect storm. First, let's say interest rates don't go up. They stay the same. That still leaves a lot of buyers priced out with the way home prices are priced today. Sellers have no choice but to lower their asking price. Second, as Airbnb owners can't afford to hold their properties anymore, they'll be forced to sell at a lower price. Third, the market will be filled with residential homes with lowered home values. As stated in the report, that is 1.4 million homes. You see, it's a domino effect. This is a snapshot of the Airbnb listings in Scottsdale, Arizona. If one house in this neighborhood was sold for a lower value, then the house next to it will also be worth less. The Airbnb owner who hasn't sold their property yet will own a property that is worth less than what is owed. The main cost may be different, but the effect is similar to what happened back in 2008. Now that you're more aware of what's going on, click or tap this video where Perry explains the best strategies on buying residential homes following a high interest rate environment. I appreciate you for watching. Like and subscribe if you found value, and I'll see you on the next video.